Okay, this is Brian Stoll for Timing Strategies, Tuesday, December the 11th. And oh boy, oh boy, oh boy, what a lot of fun today was. If you're on the right side of the market ahead of time, fortunately we were. And again, that's not by some magical crystal ball that we have. We just got some rules, some disciplines, and some systems and indicators that are generally more often right than they're not. And today, is one of those days that you just wish you had more of your winners. We were short as of the close yesterday. If you look at our other video from yesterday, we were short as of yesterday's close 40%. Let me draw that again. As of 40% yesterday's close. So today turned out real neat because we got about a 2.5%, 3%. And again, we used a basket. We used the RIDEX end of day mutual funds with the basket of the Dow, S&P, Russell, and NASDAQ. Got about a 2.5%, 3% move depending on which way which index you're counting. But we'll just use the S&P for about a 2.5% move. I threw up some moving averages in here because I use them and then I don't. Okay, it's the key is, and that's kind of what we do here is when to use them and when not. And there's no magic formula or for that one either. But there are some rules and guidelines. I brought these moving averages in here. They're a 21-day exponential and a 21-day simple. If you look at that low that we got back on December the 4th on the spiders. My first target is right there. If we can get a trade down, again, we have 40% short as of yesterday's closing price in a basket on the indices. Two things that are going to happen. Obviously, it's either going to go up or going to go down, right? Well, that's too simple. That's kind of ridiculous. If we get a bounce tomorrow and the next day, who knows how high that bounce will take us. I don't believe that any bounce that if we get before we take out the low of today is going to go much higher than 1.5 to 2.5%. Okay, so yeah, I know that's a wide range. Give it about 1.5%, 2% at the most. That take us back up to about the 1500 level on the S&P cash. Somewhere right around there on the spiders, right at about 150. 150 half, 150, 151. At that point, if we get that type of move up before, and I say before, over the next day to 3 days, before we get a trade below today's low first, then what we're going to look for is to add to that short position on the way up. Again, we got 40%. If we get a move that takes out the low and comes back down to this level right in here, below the December 4th low, then we're going to manage the position accordingly. That's my first target for this move. And what I'm looking for is an expansion. I'm looking for an expansion move that's going to take this thing down from here on the close of today, wipe out the lows of the 4th, and then we'll see a move back up. But ultimately, I anticipate that this move is going to go lower yet. It's just a matter of what it does at this level. And again, that's right around that 21-day average, which is no magical formula, but it does have some weight to it. What I want to get to also is our bond short position, which today took some heat. But hey, you can't have everything. I mean, sometimes you get lucky, you get everything working your way in all positions. But again, we're back to that regression channel. Let me draw this back a little bit. That regression channel from the June 13th highs in the 30-year Treasury bond down to the lows. We're sitting right at that median point, and at that level, the bonds had the biggest down day that we've seen, or excuse me, up day in a long time. So it's just kind of retracing that move right to that 4.5 level. And again, we were shooting for up in here around that 465, 475 level. We'll see what happens. We still have that long position on. What I want to also get to is the GDX, because for all the sell-off that we saw, and this is a gold sector ETF, for all the sell-off that we saw and all the papers, stocks, the indices and so forth, the gold really didn't take it that bad. But what did is the XLB for a material sector. All right, so let me get rid of all this junk. Chart objects, delete all. All right, let's make it clean. that XLB was down 4.5, almost 5%. And again, we're gunning for that lows on that thing, so we'll see what happens when we get there. Another one that if you take a look at that we were talking about, we weren't talking about shorting the XLB, but we were indicating we'd get short the XLE, which again had a big bad down day, wiped out a couple of lows. We'll see if we want to put that short position on if we do get a bounce. And again, tomorrow's the tricky one, so the other point to bring in is the XLF. What do we get there? That's that one in the IYR. Big, bad, ugly on the sell-off there. And we were short that. We did not cover our shorts. If you check out our videos and our comments from about 2-3 days ago, we were short as of the close of the 7th. And we held that even though it went against our stop by 10 cents. We still held it. We have that short position on still in the XLF, but we are short on the XLF using the SKF, which is the 2 beta ETF, which again, that worked out real well today. We were also looking for a short entry on the IYR. We didn't put that on. Everything happened today quick at 11:15, California time, 11:14. Everything dropped out of bed in the space of 2 minutes. 2-3 minutes, and it was down almost 1.5%. And I don't like chasing moves like that. You wish you do, but, those are the ones that get you when they don't work out. And the other point I want to bring up again is the EEM. EEM, hey, if you got a lot of this stock in your portfolio, the emerging markets, yippee yahoos, don't stick around too much longer with that if you're still long. We are short the EEM using the inverse 2 beta fund, again, the EEV, and we're short, like I said, as I mentioned, from back on the 7th. So that's working out real well also. What again I'm looking for with the EEM, if we get it, is again just pretty much with everything with all the indices. Move up. All right, let me draw this out here. And this goes for just about everything. We got to move up. We got to move down. And this is where the count starts from here and then back up again. So that took out the highs. I'm looking for a takeout of that low on everything, on all the indices, and at that point we'll see what happens with the spiders, with the EEM, everything else. Does it take that out and does it head back up first? And if that's what happened, is it a bear market? Is it a head fake? Or does it take that out and just keep going and going until we see what happens next? Don't know. Wish I could tell you. Wish I had the crystal ball. But if I did, I wouldn't be making these videos and I wouldn't be doing what I'm doing. I'd be on my yacht, and that'd be that. On my yacht down in the Caribbean somewhere sipping rum. So other than that, keep tuned. Give us a phone call, 1-800-675-2131, or drop us an email from our website. If you have any questions, look forward to hearing from you on those. And until tomorrow, have a good night, Happy Hanukkah, and Merry Christmas.